Ever wished you could just fly over rush hour traffic?
Yeah, who hasn't?
Well, that future might be closer than you think.
Really?
Today we're doing a deep dive into Archer Aviation,
Okay.
ticker symbol ACHR,
Got it.
a company making waves in the world of eVTOL aircraft. You've sent over a whole stack of research on Archer,
I did.
and we're here to break it down for you. By the end of this, you'll have a solid understanding of the company,
Okay.
the market they're in, and whether they might be worth your investment. All the sources, by the way, are linked in the description below.
Awesome.
So what's really captured my attention is how Archer is positioning themselves.
Oh, how so?
They're not just building electric aircraft, they're aiming to transform urban transportation with air taxis. Imagine a world where your commute is a quick, quiet hop across the city.
Wow.
That's the vision they're selling.
That's ambitious.
It's a bold vision for sure. So let's get into the nuts and bolts. From what I'm seeing in the research, Archer's business model revolves around developing and manufacturing these eVTOL aircraft, specifically for urban environments.
That makes sense.
Their flagship aircraft, Midnight, is designed with that urban landscape in mind. It's all electric, uses a tilt propeller system for vertical takeoff and landing, and can carry 4 passengers plus a pilot. With a range of 20 miles and fast charging capabilities, it's built for short, efficient trips across congested cities.
So kind of like an air taxi service?
Exactly.
Cool.
And get this, it's supposed to be 100 times quieter than a helicopter at cruising altitude.
Really?
Forget those noisy choppers we're talking about, a near-silent air taxi experience.
Oh, wow.
That's got to be a huge selling point for city dwellers.
For sure.
Noise pollution is a major concern in urban areas, and Archer seems to be addressing that head-on. Now, zooming out to the bigger picture, the eVTOL market itself is projected to explode in the coming years. We're looking at estimates ranging from $17 billion to almost $40 billion by 2035. That's a staggering amount of growth.
That is.
The research mentions a compound annual growth rate, or CAGR, of around 36.8%. It's clear that investors are excited about this sector.
Definitely.
And right now, North America is the dominant player, holding over a third of the global market share.
Interesting. What's fueling this rapid growth?
Well, what's fueling this rapid growth is a convergence of trends.
Okay.
Advancements in battery technology and aerodynamics are making longer ranges and higher speeds possible. At the same time, cities are grappling with worsening traffic congestion, and eVTOLs offer a potential solution.
I see.
It's like the perfect storm for this industry to take off.
Yeah.
And then you add in the rise of autonomous flight technology. We're seeing it everywhere, from self-driving cars to drones. It seems inevitable that eVTOLs will become autonomous as well.
Right.
That's right. Autonomous flight could make these aircraft even safer and more efficient, and potentially even more affordable in the long run.
That would be huge.
And Archer isn't ignoring this trend. Their partnership with Anduril, an autonomous systems company, shows they're already thinking about integrating this technology.
So they're ahead of the curve.
Okay, so we've got a potentially massive market, rapidly advancing technology, and a company with a clear vision. But let's not forget about the competition. The research mentions a bunch of other players like Joby Aviation, Beta Technologies, Lilium eHang, and Volocopter. This isn't a one-horse race.
It sounds like a crowded field.
Competition is fierce, and there are some significant hurdles for any company trying to enter this market.
Like what?
Developing and certifying these aircraft requires billions of dollars in investment. Then there's the lengthy process of getting FAA approval, building the necessary infrastructure like vertiports and charging stations, and of course, winning over public acceptance.
I see.
It's not going to be easy for anyone. But shifting gears a bit, let's take a closer look at Archer's leadership team. What I'm seeing in the research is a pretty impressive group of individuals with backgrounds in aviation tech and even startups.
Oh, that's good.
They've got Adam Goldstein at the helm as CEO, who brings experience from the software world, having founded a company called Vettery. Tom Muniz, the CTO, has extensive eVTOL experience from his time at Wisk and Kitty Hawk. And their CFO, Mark Messler, comes with a strong financial background from companies like Volanzi Inc. and Bloom Energy.
So a pretty well-rounded team.
This team has also proven they can handle tough situations.
Oh, yeah.
They successfully navigated a lawsuit with Wisk Aero, demonstrating their ability to manage risk and come out on top.
That's impressive.
And when it comes to capital allocation, they've been quite effective.
How so?
Archer has raised over $1.1 billion in funding to date, which they've used to fuel R&D, build manufacturing facilities, and forge key partnerships.
They've been dizzy.
All that said, it's important to remember that Archer is still a pre-revenue company. They're spending heavily with operating expenses exceeding $118 million in the last quarter alone.
Yikes.
So managing their cash burn, which has been around $415 million over the past year, and ultimately reaching profitability will be crucial for their long-term success.
Yeah, they'll need to start generating revenue soon.
Exactly. That brings us to their financial health, which, as you might expect from a pre-revenue company in a cutting-edge industry, presents a mixed picture.
Makes sense.
Their latest financials from Q3 2024 show a significant net loss of over $115 million driven by those high operating expenses we just discussed.
Oh.
However, their market capitalization is currently around $4.64 billion, indicating that investors see potential beyond the current losses. Their strong cash position and access to capital are definitely points in their favor.
Okay, that's good.
But there's no getting around the fact that they have high debt levels and are relying heavily on equity financing. There's definitely some scrutiny on their debt management practices and concerns about their long-term solvency if they can't start generating revenue soon.
Yeah, that's a valid concern.
Those are valid concerns. Achieving profitability is the key to addressing those financial risks. Now, speaking of risk, there's a lot more to unpack when it comes to evaluating Archer's overall risk profile. But before we get into that, I want to tease something really interesting that came up in the research about market sentiment towards Archer.
Okay.
We'll dive into that right after a quick break.
Oh, all right.
Okay, so before the break, you mentioned some interesting findings about market sentiment towards Archer.
Right, yeah.
What's the buzz like out there?
Well, from what I'm seeing, the overall sentiment seems pretty positive. Many analysts have given Archer a buy or overweight rating.
Okay.
And their price target suggests there's potential for the stock to climb even higher.
So people are feeling bullish?
There's definitely a lot of optimism, but it's tempered with caution.
Yeah.
Some analysts are hesitant because Archer is still pre-revenue, and there are always inherent risks in a relatively new industry like EV calls.
Makes sense.
Yeah,
It's exciting, but there are still a lot of unknowns.
for sure.
Now let's shift our focus to ownership structure.
Okay.
Who are the major players holding Archer's stock?
The research shows significant institutional ownership, with institutions holding almost 60% of the stock.
Wow. Insider ownership is also substantial at over 32%. So the people who know the company best are putting their money where their mouths are.
You could say that, yeah.
That's a pretty strong vote of confidence.
It certainly suggests a belief in the company's future.
Okay.
Now, to really understand Archer's potential, we need to assess their risks.
All right.
Let's do a SWOT analysis.
Okay.
Strengths, weaknesses, opportunities, and threats.
Lay it on me. What are Archer's key strengths?
Starting with their technology, Archer has developed some seriously advanced eVTOL aircraft with a focus on safety and sustainability.
Right.
Remember how we talked about midnight being incredibly quiet?
Yeah.
That's a major strength not just for passengers, but for cities concerned about noise pollution.
Right. And their strategic partnerships are another huge strength.
Oh, yeah, like what?
Teaming up with United Airlines, who have placed a large order for midnight aircraft,
Right.
and Stellantis for manufacturing,
Huge.
gives them access to industry expertise, a distribution network, and of course a lot of capital. Their growing order book is another positive sign.
Yeah, makes sense.
It indicates strong demand and points to potential for significant revenue growth once they start delivering aircraft. And of course, their experienced leadership team, which we discussed earlier, is a valuable asset.
Definitely.
They've demonstrated their ability to navigate complex challenges and secure funding.
Very important.
Okay, so strong technology, key partnerships, growing orders, and experienced leadership.
Yeah,
That's a pretty solid foundation.
for sure.
But what about weaknesses? What are some areas where Archer might struggle?
The biggest weakness, as we've already touched upon, is their pre-revenue status.
Right.
They're burning through cash and generating losses while they work towards getting their aircraft certified and into production.
And their reliance on debt and equity financing to cover those losses is a concern, right?
Absolutely.
Yeah.
High debt levels and the need to continually raise capital can put a strain on any company, especially one in a capital-intensive industry like this.
Right.
And we can't forget about their dependence on FAA certification.
Right.
They're expecting to receive it by late 2025.
Okay.
But any delays could significantly impact their timeline and increase their financial burden.
And even once they're certified, they'll need to ramp up manufacturing quickly to meet demand.
Yeah, that's true.
That could lead to production bottlenecks or quality control issues, especially in a new industry where the technology is still evolving rapidly.
You bring up a good point.
Yeah.
There are always challenges associated with scaling up production, and Archer will need to manage that process carefully to avoid costly mistakes.
Okay.
Now, despite those weaknesses, the opportunities for Archer are immense.
Let's talk about those opportunities.
Okay.
We've already mentioned the projected size of the eVTOL market, but it's worth repeating. A potential market of $1 trillion in the U.S. alone.
That's great.
It's a truly staggering number.
It is.
And that's just the U.S. market.
Right.
Archer is also eyeing international expansion with plans to launch in the UAE by 2025 and deploy a fleet of aircraft in India by 2026.
So diversification and a global footprint could be major growth drivers.
Exactly.
That's exciting.
And there's also the potential for diversification beyond passenger transport.
Oh, really?
We're seeing growing interest in using eVTOLs for cargo delivery and even emergency medical services. These are potentially lucrative markets that could provide additional revenue streams for Archer.
Yeah, that makes a lot of sense.
So lots of opportunities on the horizon.
Yeah.
But what about threats? What could derail Archer's plans?
The biggest threat, as in any emerging industry, is competition.
Right.
There are a lot of well-funded companies with ambitious goals, all vying for a piece of this potentially massive market.
It's going to be a battle of the eVTOLs.
It certainly will be.
Yeah.
And beyond just competition, there are the technological hurdles. Battery technology is constantly evolving, but it needs to improve further to allow for longer ranges and faster charging times. There's always a risk that technological progress could stall or that unforeseen challenges could arise.
And regulatory uncertainty is another factor. The FAA is still developing the rules and regulations for eVTOL aircraft.
Yeah.
And those rules could change, creating headaches for companies like Archer.
That's right.
Yeah.
The regulatory landscape is still evolving, and any changes could impact Archer's ability to operate and expand.
For sure.
And we can't ignore the possibility of an economic downturn.
Right.
If the economy takes a hit, it could impact investment in this sector and dampen consumer demand.
So plenty of risks to consider.
Yeah, there are.
But after this deep dive into Archer Aviation,
Yeah.
what's the bottom line? What should investors take away from all of this information?
That's the million-dollar question, isn't it? It's tough to put a precise valuation on a pre-revenue company like Archer. There's a lot of potential, but also a lot of risk.
It sounds like a classic high-risk, high-reward scenario.
Precisely. Their strong cash position, growing order book, and the sheer potential of the eVTOL market give some reason for optimism. But it all comes down to execution. If Archer can overcome those challenges we discussed, hit those key milestones like FAA certification and production scale-up, then the rewards could be enormous.
They could become a major player in a trillion-dollar market.
Exactly. But on the flip side, there's also a significant chance things could go wrong. Certification delays, production issues, increased competition. Any of these could negatively impact their performance and send their stock price tumbling.
So for someone listening to this, trying to decide if Archer is worth the risk, what would you advise?
I'd say this is a stock for investors with a longer-term horizon and a higher tolerance for risk. If you're looking for a quick return, this probably isn't the play for you. But if you believe in the future of urban air mobility and you're willing to ride out some turbulence, Archer could be a fascinating company to watch.
I think that's some excellent advice. And for those who are interested, Archer's already hit some impressive milestones. They went public on the NYSE back in 2021. They completed a crucial flight test in 2022. And they started building their massive manufacturing facility in Georgia last year. Just this year, they received a key FAA certificate, and they are expecting full FAA-type certification by late next year.
They've been busy, that's for sure. And if they can keep hitting those targets, they could be well on their way to achieving their ambitious goals.
So after this deep dive into Archer Aviation, what stands out to you about this company and the future they're building?
What strikes me is the sheer ambition of it all. They're aiming to revolutionize transportation as we know it, to make those futuristic visions of flying cars a reality. And they're doing it with a focus on sustainability and a commitment to reducing noise pollution. Whether they succeed or not, they're pushing the boundaries of what's possible.
I completely agree. It's an incredibly exciting story, and it's going to be fascinating to see how it all unfolds. But here's a final thought-provoking question for you to ponder. Imagine a world where your daily commute involves a quick, quiet flight above the gridlock streets below. That's the future Archer is building towards.
And that future may be closer than we think.
What do you think? Can Archer overcome the hurdles and truly take flight? Head over to the comments and let us know your thoughts on Archer Aviation. And while you're at it, tell us what other companies you'd like us to do a deep dive on. Don't forget to subscribe to the Stock Analytics AI YouTube channel for more in-depth analyses of companies shaping the future. Just a quick reminder that the information presented in this deep dive is based on the research we've analyzed and the limitations of our current AI. It is not financial advice, and any investment decisions should be made after conducting your own thorough research.
Happy investing, everyone.